I'm going to start off I'm going to start off by zooming out a little bit. So what I like about Microsoft is that, despite some consolidations here and there, for the most part, they're trading somewhere between about 400, $450, right? That's the majority of the price action. They're in that kind of sideways, undecided. And they're getting ready to release a dividend. Um, it doesn't matter if buy shares tomorrow. They've already, you know, earmarked who's going to get that dividend. So don't worry about that dividend. But I'm waiting for a bottom signal here, Sip, because I want to do one of my premium trades. But you hit the nail right on the head. It's too expensive. So we're going to have to think of a different strategy. And so what I'm looking forward to do is a vertical spread.
Okay, well, let's walk me through it. So, is that we're going to use two options to kind of offset each other because of the price of the stock? It doesn't require us to take on that much risk because we have two options that kind of offset each other a little bit.
And that's exactly right. But I do want to point out, um, so vertical spreads, and not so much now because a lot of people got burned. But about 10 to 15 years ago, vertical spread education courses were the soup du jour, right? Everybody and their brother had written a guide on how to trade vertical spreads. And where almost all of them missed the boat was how much risk is actually involved in a vertical spread. And whether you're talking about debit spreads or credit spreads, they're actually synthetic equivalencies of each other. It doesn't matter. They're still the same amount of risk. So, what you want to make sure if you're going to use a vertical spread strategy, you want to make sure that you, are only investing the amount that you're ready to lose, because in a vertical spread, it can quickly go from profiting to losing the whole thing. So if the only amount that you want to put on the table is, say, 2, 3, 4% of your portfolio, that's the size of your position in vertical spreads. Don't go bigger than that. The big thing that happened 10, 15 years ago is people would put like 50% of their portfolio into a single position, and then, within a split second, they just lost 50% of their portfolio. So just be aware of that nuance with vertical spreads. Typically, I tell my folks to not risk more than 4%. In our case, I'm talking about using what's called a bull vertical spread. So I want to wait for my indicator and my follow through to come and tell me that a bottom has been found. And then I'm going to construct a bull vertical spread. And it could be a bull call vertical debit spread, or it could be a bull put vertical credit spread. Again, doesn't matter. If you're going to do credit spreads, make sure you have a margin account because it's required for doing a credit spread. But I'm going to go ahead and place that spread once I've got a confirmed bottom, and I'm going to go maybe 2 to 3 weeks out. So here's a case where I might use weekly options. I pick a strike price that is maybe not so much lower than where my reversal occurred. So if my reversal winds up occurring at $405, I might do 400 and 250 and 400. So you pick two strike prices next to each other. And I would just buy that thing and let it expire 2 to 3 weeks from then. And it's one of those ones where the clock just works in our benefit.
Yeah, I mean, just looking at this chart on the low end, that 400, on the high end, that 470, that's a pretty wide range in stock movement, even on the expensive side. So, what you're saying is, this spread would risk 4%, but could profit how much in theory?
I mean, some of these spreads can go up. Let's take a look. I'm going to go ahead and pull up our options lookup tool. This is one of my favorite things, and by the way, we're still giving advanced, anybody who wants to access the options lookup tool, you just have to go and get free access, go and download our indicators, and we're automatically giving you access to our options lookup tool. But you go to the options lookup tool, we're going to take a look at some of these Microsoft options, and we can do this right here, right now. Microsoft options. I've got, let's say, 10 different strike prices, and I'm going to want to go, like I said, maybe 2 to 3 weeks out. If you're going to do, you know, if you're going to do your monthlies, it's the third Friday of the month, so that would be February 21st or even the March 21st option. But here, let's take a look. Um, if you're going to do, for instance, the call debit spread, then you would pick the two strike prices that are kind of in the money here. And you'll notice, do you see here, Sip, that there's a $2 difference in price between the 407.50 and the 405? Actually,
Yeah,
a little less. Here, let me pull up my calculator and we'll just give people a quick example of how this works. So here's my calculator. So the one is $5.85 and the other is $4.33. So you'll see it's currently trading, or at least at the end of day of yesterday, it was trading at $1.52 if you do this one. Vertical spread, meaning you're using the two strike prices next to each other, same expiration date, right? So you see that $1.52?
that's right.
So long as prices stay above that 407.50, and that's why we wait for a confirmed reversal up. So long as prices stay above that 407.50, this will grow by February 21st to $2.50. It grows to the difference of the strike prices. So it goes from $1.52 to $2.50. So you're making, if I do my little math here, um, $2.50 minus the $1.52, you're making 98 cents of profit. And that would be an ROI of about, 64, 65% ROI. So if you can pretty much make 2/3 of your investment in profit. That's pretty phenomenal, right?
It certainly is, and it that's only for like a week, right? Because if you're looking at the 21st, that's next Friday.
Yeah, that's a week away. Now this was, again, the end of day prices. Basically, when you get your confirmed bottom, we're gonna go about 2 to 3 weeks out, or if you have to stretch it out to the next monthly, do that. And then, pick the two strike prices right below that confirmed reversal.